Thanks for joining me this Sunday evening. Today's video is one I probably should have done a long time ago. As I mentioned, I did not know about risk management until later in my trading journey. I was just kind of like winging it, hoping on a wish and a prayer. Like everybody talks about making sure you don't overtrade or you don't over leverage your account, but for a lot of people, like myself, I never knew what that meant. And I don't even think I really heard that when I was being taught how to trade until I got further in my trading journey and started talking with a more experienced trader who shared some insight with me on that. So it was only then that I began to take a systematic approach in how I was trading. So just so you guys know, when you're taking trades, you have to decide what your desired risk is on the account. And like, it's crazy because when he laid it out for me, I'm like, oh, this makes perfectly logical sense. I don't know why I never thought of this. You have to figure out what you want to risk on your account. Do you want to risk 1% of the account every single trade, which means that you would have to lose 100 trades in a row in order to lose the entire account? More than likely, that's not going to happen. Do you want to risk 2% or do you want to risk 4%? Once you make that decision, you can kind of set yourself up as far as your position size. When people ask me, I get questions on here, what lot sizes do you trade? And somebody even commented like, I bet she don't even trade more than $200 per pip. Nah. I'm a much more conservative trader. I have become a sound believer in taking a systematic approach when it comes to trading. My lot size is determined by my setup. If I'm taking a trade with a certain amount of stop loss, then that's how I determine my lot size. So let me show you guys what that looks like. I'm gonna hop onto this tool that I created for myself in order to get a more accurate idea of what my lot size should be based on the pair that I'm trading. There's a simple formula that you could do on your own, even if you don't use the calculator. But one thing that you'll want to remember and take into account is the exchange rate of whatever currency that you're trading versus whatever your currency is. Like for instance, and I'm going off the top of my head, like I know JPY pairs convert to about 92% of the US dollar. So when I'm calculating my stop loss, I take that into account because some currency pairs I can trade a little bit larger size because they only convert like 74%, 75% of the US dollar. So it gives me more room to play with. That's kind of what this calculator does. It just takes it up a little bit of an extra notch. Like I said, even if you don't use the calculator, definitely take this into account and figure out how to do the math on your own. And I recommend that you learn how to do the math just in case you do use the calculator and then it breaks. You don't have access to it. You'll still be able to quickly figure out what you want to do. And just to run that formula by you really quick, what you do is you take your account size, multiply it by your desired risk, divide that by your stop loss, and that gives you a general idea of the percentage you could trade. If you want to up it a notch, then you would have to take the conversion rate of the pair that you're trading. So like I said, for instance, JPY pairs convert to about 91% of the US dollar. And I may have that off. I know it changes from day to day and it fluctuates, but that's just the general idea. So I'm gonna hop onto the calculator. Remember that you are using this at your own risk. I developed it as a tool for myself, but I've had several people who have been asking for it. So I am going to share it with you all. All right, let's take a look. Okay, y'all. So this is the calculator that I put together. I use it to quickly access and reference like what position size I should be trading. This is the calculator itself right here where my mouse is moving around. So in it, I've just created like a drop down. You can go in and choose which pair you want to trade. So I'm going to pick CAD JPY since I gave that as an example in my speech. And then this says risk percentage. So you choose the risk percentage that you want, right? And so if I had marked up my chart and I came up with a setup where there was like a 55 pip stop loss, I say I want to risk 1% of my $10,000 account. I put in my stop loss here. This asks you how many number of positions do you want to take? So I'm going to pick one. So you see how this switched over to this trade is good to go. It's telling me that if I want to lose only 55 pips and 1% of my account, then I can only trade $2. So here, let me break it down for you again. 55 pips at 1%, 1% of the account is going to be $100. My setup is 55 pips. So if I only want to lose $100 with a 55 pip setup, I can only trade just under $2 per pip. I know it's tempting. You might want to, increase that lot size because this is a setup that's got 200 pips and you're going to make a whole bunch of money. But I guarantee you that might work once, that might work twice, but it's not going to work consistently. And like you will win some, but then you'll lose and you'll lose more than what you won. Like it won't be a consistent thing for you and you will be frustrated. I guarantee that you will. Okay. And so this side, what it does is it calculates the profit for you. So you have an idea of, what you're looking at. And again, it calculates based off the exchange rate for the currency pair that you're trading. You put in your account size, and then let's say the setup, let's call it 225 is on the table. And so this will give you an output of what that amount will be. It's not showing up right now. I'll fix it, but it will when you guys utilize it. So here it just tells you, like I said, JPY pairs were at 91% of a whole US dollar. So this will fluctuate based on what is going on in the market and the exchange rate, and then you'll be able to quickly calculate. So here is just a condensed version. So usually when I'm looking at trading multiple pairs and I know that my desired account risk total is $100, I can go in, I can put up, I'm looking at CAD JPY, I'm looking at USD CAD, and let's see, USD, where is it? USD CAD. And let's say I'm looking for a sell, I'm looking for a buy. I put in my notes on why I think it's going to happen this way. I do my stop loss. I got 20 pips stop loss here. We got 225 pips there. And then let's say we got 125 pips on this one. And then you can select whether you won it or lost it. And then it'll tell you the maximum position size that you can take on each setup in order to make sure you don't lose more than what you say you wanted to lose on the pair. So like this one is telling me $6 per pip based off of a 20 pip stop loss, which sounds about right, 120, but this is probably like 70, CAD is probably what, 72, 73% of the US dollar, which makes sense. So it shows you over here in dollars what you are risking to lose by doing it. So each, like you could do it based off of 1%, 2%, and it'll adjust over here. But if you want to say, like, it shows you the output of your total desired account risk. So if I put in, I want to only risk 0.25% per trade, then it'll show me what I need to trade in order to do that. And then it'll give me my total account risk as well. So then it shows me what my total profit could be, what my total loss would be based off of the setups that I put in here. So if I'm looking at multiple pairs, this will tell me what I need to trade for each in order to make sure that I don't blow my whole account, right? And so here, this is just risk to reward. I forget what threshold I put in for it to be green, but someone asked a question. I want to say it was last week, like, Casey, you say mark up all these charts and take all these trades. How are you making sure you don't overtrade? So I rank my stuff based off the risk to reward setup. And then let's say I got 10 different setups that I'm looking at. I'm taking the highest risk to reward, the one that brings me the better reward. That's the one that I'm taking. So if I had like 10 trades on here and I only got 2 that are in green, and one is a 8-1 and one is a 6-1, and then the other one is like 4 or 3, I'm gonna take the 6-1 or the 8-1 over the 4 or the 3. So the color coding is just really to kind of help me be able to quickly identify what's going on, right? So again, you guys are using this at your own risk. I put in some notes and instructions so that you could like kind of figure out how to utilize it as quickly and easy as possible. I tried to outline the cells that you should be editing and entering information into. The ones that are not outlined in green, you should not be changing anything. This section here is just a trade recommendation. Like if your stop loss is too big or your account is too small, it'll tell you like, no, you don't need to take this trade. So if I drop this down and say I got 125 pip stop loss, that was backwards. Let me make it 200 pip stop loss. Why is this? Hold on. All right, there we go. So it'll, if the stop loss is too big and my desired risk is too low or the account size is too small, like if the trade doesn't even hit like that 10 cent per pip thing, it'll tell you, do not take the trade. Like it doesn't make sense, or you're not going to be able to follow the rules that you set. And that's what it's all about, is becoming a rules-based trader in order to see consistency. So that's that part of it. I've also got like an analysis sheet. This is what my mentor put together that I referenced in the other video, where we go through and utilize this tool to be able to identify and keep organized what's going on in the trades, right? So we'll start from odd CHF, odd CAD, odd USD, like all the pairs that we trade are on here. And then you can go in, you know how we do the higher time frame markup. We could say if it's bullish or bearish. We could say if the daily is bullish or bearish. We could say if the stochastic RSI is telling me it's a buy or a sell. And then when I say like, when you got to know where you are in the trade, this is what I'm talking about. Like I trade retracements. I think if you know how to do it and, you know, you could do it, do it. There's nothing wrong with it. You just have to know that you're in a retracement. This is a up push zone, excuse me. This is, you know, don't trade, or I'm in a down retracement. And so you would go ahead and put in, you know, how are you entering on the 1 hour? These are the ways that we enter trades. Like it has to meet certain rules in order for us to do it. Are we limiting in? Are we executing right away? Is it a, you know, are we waiting on a 1, 2, 3 on the backside of a trend line? Is it down or is it up? Are you waiting for support, resistance? Like it gets really detailed, but this is stuff that we go over in the weekly Forex ritual. So then you can classify it, if it closed, if it's set up, no setup, you know, and then is it something that's on your list to watch right now? Is it hot, or is it going to take a month or 3 weeks for it to get where you need it to get in order to enter the trade? So this is what you'll want to use. I like it because one, it's on the cloud and I can access it from anywhere. I can pull it down from my phone. I can see like my notes or whatever else. You can add like your entry number here. You could put the number of pips that you're anticipating here, and then whatever notes. So if you come up and you say on the daily, it looks like we've reached the 38.2 on the daily. I'm expecting price to go to the 618D extension from here. I'll enter at this point, blah, blah, you know, just journaling, writing down. Like that's the only way you're going to be able to become a better trader. So I recommend this. And then I have just like an account growth simulator. You don't have to do anything with this. I just like to see. I'm a visual person, so I like to see like what I could potentially make based off of what's going on. So use this at your own risk. I am not telling you to use this for sure, but you know, use it at your own risk. I find it helpful. And then, like I said, even if you don't use this calculator, do the math. But the way to download it, when you click the link or you fill out the form that you're going to get an email to your inbox with a link. You just go to file, you go to download, and you download a copy of it, or you can make a copy and upload it to your Google Drive. This does not work well in Excel by itself on the computer. If you download it as an Excel file, upload it back to Google Drive, and it should have full functionality. So anyway, I appreciate you guys for watching this video. I hope you are having a fantastic Sunday, and I will see you on the next video. Have a great evening. Bye.